Clown. Beautiful. All right. Well, first and foremost, I just want to say appreciate everyone jumping on. Today's topic, as you know from the Facebook post, is buy downs and price cuts. Now, what inspired me to have this conversation with you guys today is just simply what we're seeing with the markets. We've had a bit of an up and down year. There's been some positives, there's been some negatives, but the point is that right now we're kind of on one of those swings that's unfortunately not as pleasant as we would love. And so that's resulted in a little bit higher interest rates. So you guys, being on the streets, trying to sell homes and trying to get buyers into homes, you're dealing with objections, and you're going to be dealing with objections from, these prospective buyers and sellers for the markets right now. And so part of overcoming those objectives is knowing what tools are at your disposal. So that's the main point of today's call. Now, for those that are unfamiliar with the format, I usually talk through. If there's anything that you specifically want to ask, definitely feel free to interrupt. If I'm not interrupted, I'm just going to keep chugging along, and then we can do more questions at the end. But if there is anything that pops up, just feel free to let me know. I'm not as able to follow the chat window as I would love. I still haven't figured out a perfect setup with my multiple screens on that. So if it's possible and you have a question, definitely just unmute yourself and just ask from there. All right, so let's get started. So the Charlotte market right now, though, this is my home market. This is the market that I'm familiar with the most. I know that some of you are not in Charlotte, some of you in other markets. Your markets are performing differently. But right now we've got rates, moving up a little bit into the 6.58 range, which is on average. For those of you that wonder what average mortgage rates mean, it's the average rate that's locked. So that includes points and fees. So that doesn't mean free rates. That doesn't mean that's what the market rate is today. That means what people are locking on average, according to Freddie Mac, it's 6.58%. The average median days on market is 46 days in the Charlotte market, and the median sale price is 413. Now, why is this information helpful? Well, the rate is obviously why we're here talking today. We're talking about rates going up, how this can, affect buyers' morale and sellers' ability to move homes. Days on market, we've all seen homes that sit significantly longer than 46 days. We've seen homes go off market much quicker, right? This is the median days on market, but this is helpful because, to position a property for sale, there's a lot of factors that go involved to move it quickly. And so some of the strategies we'll talk about today can move those properties quicker. So 4 ways to spend seller dollars. So guys, this slide is all about, if you position your property, if you're a listing agent, you position the property with a certain price, but the seller's already promising
Great,
a
I can't
price
hear
to
him.
a client. Nick, I'm gonna mute you real quick. If you position your property listing for sale, if you have credits already advertised, these are the different things that buyers can use those credits for. So the first terminology that you guys may or may not have heard of is temporary buydowns. Temporary buydowns, we'll go through it a little bit, but it offers a temporary reduction in the interest rate, which is quite meaningful for a period of a year, 2 years, 3 years, so that buyer can get into that home more comfortably. A permanent buy down is your standard run in the mill. We're paying a fee to reduce the interest rate for the life of the loan. So that's everlasting. As long as that loan is open and that client has that mortgage, their buy down will be permanent. That's the name, permanent buy down. Price reduction. So, let's say the buyer sees that their seller credits advertise an amount of 10,000. Well, maybe they just want to see a price reduction in 10,000 for whatever reason. That's an option as well. And the last option is just using those closing costs that are paid by the sellers to do closing cost coverage. So come out of pocket with less money. These are all strategies right now that can help move a listing much quicker, or if you negotiate for a buyer, can help provide them a lot of advantages for their mortgage. So let's talk about the temporary buy down. So the real upside with this is there is temporary significant reduction in the interest rate. So for example, if we do a 1 year buy down, That essentially gives the buyer a 1% reduction for 1 year. So if the market rate is 6.5%, they're getting a 5.5% for the first year. Now that may not sound like a big spread, but it is. That's a very meaningful payment difference that they're going to see. So they get real payment relief in the first year, 2 years, 3 years of their mortgage, just up to 3 years of temporary buy down that a buyer can exercise. If a buyer has income that they know is going to be getting more, higher, as the years progresses, but right now it's not as high, is great because as the payment goes up with the temporary reductions being alleviated, so does their income. So it might neutralize, their monthly payment balances and things of that nature. And so, for clients that I know are kind of going to see that windfall with their jobs moving forward, I actually talk about this a lot because it's not a bad strategy to look at. Another upside for the temporary buy down is that the money that's being created into like a little fund to make the buy down possible is held in escrow. And if they refinance before the temporary buy down is done, that money goes back towards a principal reduction because that's their money. So, if they have, let's call it $5,000 in the escrow account, if they refinance the home because the market conditions have given them an opportunity to do so, well, guess what? That $5,000 is going to neutralize their principal payment or principal loan balance by $5,000, which is really cool. And to be honest, the real benefit is for sellers. You can advertise, and builders do this a lot. So any of you guys work in the builder business or have clients that look in the builder space, they'll advertise 399s, 499s, a lot of teaser rates that make people so excited, right? And they're doing so with these buy downs.
Yeah.
And the buy downs are, a way to get people to enter the door, and it's a great marketing tool. And it's not fake news. It's not spam. It's not, not a benefit. It actually is a benefit. Now, the trade-off of these, and this is where, it's not always the best benefit, is it's only temporary relief. And so when I'm educating my clients, y'all, I walk through these options with them side by side. I show the temporary, I show the permanent, I show the closing cost reduction. I want them to see, meaningfully what the credits that they're negotiating are going to be able to accomplish for them. And, when it comes down to explaining the buy down, the temporary one, I do have to emphasize it's only temporary. So you have to have a plan. Next year your payment's going to be this. Are you okay with that? The year following the payment's going to be this. Are you okay with that? And so that's part of the downside. The buyer cannot qualify on the lower of the note rate. So let's say they get a 2% reduction, so a 2-1 buy down or something. We can't qualify them on 4.5. We got to qualify them on 6.5. So, qualification wise, they don't get any leniency per se. And it's not always advantageous if the client's looking to stay in this particular loan for a long period of time. So for those that have worked with me, I know we've got a couple in here that send me, clients, I ask these questions up front. I'm asking, how long do you plan on being in the home? What are your refinance objectives in the future? Things of that nature, so I can, kind of meaningfully strategize what might makes the most sense for them. And so when we're talking about the 2-1, 1-0, or 3-1 buy down or whatever, I want to make sure that they aren't planning on keeping that note for a significant period of time. Some people just want to set it and forget it. They don't care, right? And for them, it may not make sense to do the temporary buy down. It may make more sense to do a permanent buy down. But everyone's goals and objectives are different. So I talked a little bit about kind of what these temporary buy downs look like. This is an example here of a 2-1 buy down. So in a $360,000 loan, the note rate 6.858. The first year payment would be 4.875. Okay, or first year rate would be 4.875. That principal and interest would be 1841, guys. So remember, I said that the builders are advertising this. They're doing it for a reason. $453 payment difference from year 3 to year 1. So clients that are putting a lot of their money that they've saved up for years, they're probably a little bit worried about, okay, how do I build back, my reserves? Well, for 3 years, you've got a payment reduction to help with that. And in this particular case, year 1, they're paying a rate of 4.5875 or 4.58. Sorry. Now, year 2, that adjustment adjusts 1 full percent. So for every year, there's an adjustment of a percent. Okay, so we increased that rate now to 5.58. So they go to $232 cheaper than their full note rate. And then finally on year three, they've got the 6.58, which they're going to have for the rest of their duration of this loan. And their payments now at $2,294. When you break down the math on these side by side for clients that are planning on refinancing in 3 to 5 years, this is a no-brainer, right? And even more than that, if an opportunity presents itself to refinance in a shorter period of time, again, they get that refund on this money. So it's a no-brainer. It makes a lot of sense. For those that know me, they know I took advantage of a 2-1 buy down on my home purchase in 2023. Negotiated some credits with the seller. I had a 6.5%, oddly enough, for my full note rate, and paid at 4.5 for the first year, 5.5 the second, and then it amortized to the 6.5. And I was pretty pleased with that because my first year's payment, going up in price point from my previous home, was relatively close, and it allowed me to start budgeting, accordingly and kind of planning for that. But there's a real value to this. Now, if you're wondering kind of what the credits need to be able to make this happen, it is going to be based on the loan amount, right? So there's a calculation that we do, and when you're negotiating, we'll work with you on this, but we're going to have to figure out what the dollar figure has to be to make the full buy down happen, because essentially the seller is paying the offset. They're paying the delta between the 6.5 and the 4.5 and then the 5.5. So we have to be able to collect enough based on the math from the sellers to be able to make those payment deltas happen. So in this particular example, we have 8,200 that we're collecting from the sellers to be able to make this 2-1 buy down happen. So that is how you set these up, and we work together, you and I, to kind of make sure we're asking for enough credits when we're doing a buyer representation. If you're a seller's agent and you're doing, a presentation, or not a presentation, but you're advertising for an open house, or you're putting on the MLS, the number that needs to be there for the buy downs, I'll work with you on that as well to help you make sure the calculation's correct. That way, no one calls you out or whatever. But that's how that works.
Can I ask you something? Do you think
Of
you could
course.
remove your picture from the main screen because it covers half the screen?
Yeah,
And
let me
it's,
see what my
we
options
can see
are.
you up there with everybody else, but now you're in the bottom right corner, and like I
Yeah,
can't see what you wrote there.
yeah. It's funny, the toolbar on this, it always is really slow. There we go. Layout, content only. Better?
Yes, it worked. Thank you so much. Thank you.
Of course. I appreciate you mentioning it. Thank you.
Of course.
All right, so guys, we have option two. This is your run in the mill. This is your father's grandfather, whatever, grandma's sister, etc's option that they've all talked about, right? They heard this terminology called points, and points are a fee that can pay down or can buy down the interest rate from whatever the market rate may be to a new rate. Okay, so the upside is it's permanent, right? It's day one through the last payment, your rate's been reduced. It's usually the most payment saved per dollar over the length of time. It can help buyers who are tight qualify for more if you have a lower rate. For those of you that have represented very tight clients, you've heard probably from a lender in the past, hey, the rates go up, we may not be able to buy this much home, we might have to reduce their pre-approval. This is the way to offset that, because if we're reducing their rate or keeping it lower, we can keep the loan amount higher based on whatever their max approval looks like to be. The savings never expire on this. This is, you set it, forget it. Life of the loan, you get a better rate than what you would have gotten on market that day. However, the trade-off is the full value only shows if you keep the loan for a while. So again, I strategize with clients. I go over options, with them so they can kind of see what makes the most sense. And, if they're planning on, moving in 1 to 2 years or refinancing in 1 to 2 years, this may not make sense because it's essentially a transaction fee and there's a break even cost to it. So if you're applying $5,000, into reducing the interest rate, you need to be able to get $5,000 back to even break even, and so this is part of the conversation. The buy downs are subject to seller contribution limits, and we'll talk about that on another screen. And of course, as I said, refinancing early leaves some of this benefit on the table, so it may not make the most sense for every buyer, but it's a great option. And I would say in 9 times out of 10, this is the option that people go with if they're trying to reduce their interest rates. They do the permanent. They don't always do the temporary. I don't see as many clients take advantage of the temporary as I do the permanent buy downs. Now, another way to move listings and another way for clients to save money is price reductions. And we're seeing a lot of that right now on the market. It's the simplest ask, right? It's easy for sellers to understand. You don't have to walk through a bunch of jargon and explanation and tables, and it's just straightforward. Hey, if we want to move this listing, we might be $20,000 or $10,000 too expensive. Let's make a price reduction to get more traction on the property. It has the upside of benefit the buyer too. A lower price means they're financing less, lower payment, etc. But it's not going to have as much meaningful of a payment difference, and that's the trade-off, right? So for your buyers, this actually is the worst of the options that I'm going to show you as far as savings go. Because if you're only moving the needle $10,000, we're not talking about a massive payment change. We're talking about, 30, $40 that they're going to see on a monthly basis. And that's not a substantial sum, right? And so, when talking price reductions or negotiating lower than list price or something like that, I'm not part of the negotiation, but I do provide my 2 cents to clients. And one of the things I always tell them is get the credits. If the property will appraise, get the credits before you get the price reduction, or get both, right? I'm sure Matt, Calvin, Adrian, I'm sure you're all great agents, and you might be able to accomplish both goals, right? You get a lower price on the home, get some credits for them depending on how long the listing's been active, and that's awesome. But the price reduction is simple. It's very, what you've seen. So you've seen on MLS all the time, and everyone understands what that means. Now, when there's seller credits, right, and we're using that to help move these listings, the buyers also have the option to just not mess with the rate at all. They can take the free rate, whatever's on market, and they can just use the credits to offset their closing costs. And to be honest, guys, that's a great strategy. We get $7,000 in closing cost credits. Most buyers aren't going to have closing costs. They're only going to come out of pocket with their down payment. And that's great because the break even on $7,000 on an interest rate delta is not going to be short. It's going to take several years to achieve that. And depending on how long the client's in the home and the mortgage, they may never see that full upside. So, this is actually one of the options that I strongly push clients to when they're asking me my own personal feedback. Now, if there's money left over to do buy downs, I have seen some pretty ludicrous seller concessions recently. And if there is money left over to do buy downs, do both. Buy the rate down, pay the closing costs, win. But if it's just enough for closing costs, a lot of times this is the best strategy. And this helps move the needle because you've got buyers right now that are looking for an advantage or looking for a reason to say yes, right? If they see their pre-approval quotes that they have from us as a lender, they say, okay, you need $40,000 plus you need $7,000. Oh, and the rate's 6.5%. It was 6.25%. That's a lot of reasons to say no. But if we can, as listing agents, if we can advertise our property that's going to get our sellers good value, but also provide a benefit for buyers, it's going to be more attractive. And it's easier for me as a lender to explain that to them, like, oh gosh, you found a great property. They're also paying closing costs. That's amazing. Let me show you what you can do with that. And that allows us the opportunity for them to say yes, and in a way that actually benefits them. It's not just a sales tactic. It's not fake news. It's not spam. It's not whatever. It's real. It's a real benefit for clients. And so, closing cost credits, are amazing because you can do all these various things with it, as we've demonstrated. Now, this is a slide that kind of goes over the case of closing costs and, what, again, it is a basic example of what it can do. So, your down payment's 40. Let's just say you pay, $13,000 for closing costs and prepaids. Cash due at closing is 53. But what happens if you advertise the listing or you were able to negotiate a listing to get full cut $13,000 in credits? Well, that client's getting it at $40,000. That's way better than what I would have quoted them in their pre-approval because we don't know about credits in the pre-approval. Market conditions may have changed. It may have gotten more expensive on the monthly payment, but this is a reason to be excited. And I'm excited with them when I see this. If I hear that verbally we're going to negotiate this, I show them that, in these presentations, and we get excited about it because if we can secure that, it is a huge financial win for the clients.
Yeah, this is Vijay. I
Yeah,
have a question. So
yeah,
I have a listing. So I need the right context, the text, what I need to add if the seller is willing to, you know,
yeah.
um, give some, yeah,
Yeah, so your conversation with the seller and then how you advertise it, your conversation with them is this: find their number that they want to hit, that you think that is achievable and you all mutually agree.
right.
Find that number, and then once that number is agreed upon, see, look at the comparables for the property and see if the property can comp a little higher, right? And then let's just use an arbitrary number. Let's say they want 440, the property can appraise for 450, 460, list it at 450, and then put in the MLS, seller paying $10,000 and seller pay closing costs, right? And then at that point, you've gotten your seller your net that they want. They want their 440, advertised at least as their net. And you're giving a benefit to clients that are shopping for homes to look at your home and your listing more specifically. But the MLS, you would put that remark there. And if you have open houses, make sure it's
Like
advertised, flyers, etc.
simply saying that seller pays 10,000 towards closing cost. That's it, right?
Yeah,
Okay.
correct. Yeah, yeah,
or seller's concessions.
yeah.
Seller
Sellers
pay.
concessions. I think that's more the politically correct now. Um, but I don't know if it explicitly matters. You guys can correct me if I'm wrong.
In some cases, Mr. Ian, yes.
Some cases, okay, yeah. Defer to whatever your brokerage specifically says to verbiage it out, just so you don't get yourselves into trouble. But seller
Mm.
concessions, seller credits, same thing, but concessions, I believe, is the more politically correct term now.
Okay, I can write up to $10,000 or
Whatever you and your seller want to
okay.
advertise, which you think will move the property, that's what you would write it to. Now, I am going to do a slide that's going to cover like the max that can be done on different loans, so that might be relevant here in a second.
Ooh, that's awesome.
Yeah. So, guys, every loan has a max seller concessions. So, we're going to use the correct verbiage here: seller concessions. So, you can get up to 3% seller credits, seller concessions on a conventional. Um, if the down payment is 9% or less. If the down payment is 10% or more, you can get 6%. And if it's 25% or more, you can get 9%. And that's of the sale price of the home. So what's agreed on the contract. So for simple math, if we're doing a $100,000 purchase price, you can get 3%, you can get 10% or 6%, or you can get 25%. Or I'm sorry, 9% for the conventional. Investment occupancy is capped at 2%. Standard. It doesn't matter the down payment. It's 2% max for investment occupancy. FHA is much easier. They don't have these tiers. It's just 6% of the purchase price. VA is actually very complicated because it's seller can pay every closing cost that you have plus up to 4% in extra concessions like prepaids and funding fees. So if you guys have a VA loan, I mean, I don't think you'll ever get the max credits that would max the VA program. But theirs is kind of complicated. Just know that it can pretty much cover everything. So if you get $25,000 in credits, great. Your veteran's getting $25,000 in credits. You get 30,000, your veteran's getting 30,000. It's a very open-minded program, but it's kind of complicated to explain. USDA, I don't know how many of you have USDA eligible zones in your market. Still see these every once in a while, just not as frequent as I used to. 6% of the sales price for the credits max. So, VJ, going back to your question before, You won't know as a listing agent, what program the future buyer is going to be coming in with. But just know for buyers agents and sellers agents that each program has a cap. And so part of the negotiation is figure out how to maximize the credits. So let's say, for instance, the sellers were going to be willing to negotiate more than 3% for a conventional loan, but the buyers aren't putting enough down. Well, maybe what you do is negotiate repairs that can be done in lieu of, because repairs aren't part of seller concessions, it's separate. Seller concessions would be specifically in this particular case going towards closing costs, prepaids, stuff on the loan. Repairs would be the home. So I've actually done that quite a bit where we were able to get, like, let's just say 20,000, was negotiated between the different agent parties. But the buyer only had the 3%. Well, let's just say that's 10K. I've got $10,000 to spend, so I work with the buyer's agent to find, $10,000 worth of work that the buyer would like to get done to the property, and then we just have that put on the CD and have that as a separate addendum item during the contract addendums. Easy way to work around it. Any questions about that? This is a particularly tricky slide, so I just want to make sure I don't gloss over it. Cool. All right, so let's just see what $10,000, guys, does on this table here. So you have a $400,000 home, $40,000 down, 6.58 rate. The seller offers 10K. What do we do? Okay, so in this particular example, we do nothing because there's no seller help. This one we have a price reduction, so we've reduced the price to $390. This one we have the full price, $400,000, but we're getting 10K towards reducing the interest rate permanently. So obviously the no option doesn't provide any assistance. Reducing the purchase price, actually a meaningful amount, more than you would typically see with 10,000, so $63 a month. But we are more than doubling that if we do the points. So this is why when I showcase clients the benefits of each, I want to make sure they see this, because it's very quick for a lot of people, like, I want to get the price down. I'm sure you've all heard that from your buyers before. I want to get the price down. That's fine. We can try to work with you as best as possible to get the best deal, but the price may not be the best strategy, and here's why. So I have a software that I work with that's a little bit more interactive than this specific table, but it's clickable. They can take it home with them, and they can kind of see, again, the nuances of the different options and how it affects them. I think I did a slide. We'll come up to it that kind of talks about the closing cost credits too. But yeah, points are king. So why should a seller entertain you guys talking to them about credits? Like listing agents here, why should a seller want to do it? I mean, the easiest reason for them to do it is to make the property more attractive, right? They're in many cases, not all. Some of you guys are gonna get really hot listings that are gonna go over ask it in 2 days. Other listings, but not so much. It may need some work, TLC. It's not for everyone. Wrong neighborhood, locations near a highway, something, right? And you just know the property's gonna sit. Well, let's give a reason for people to come out, right? And instead of immediately going to a price reduction to make people come out, test the waters with the credits, because again, this can be applied in many different ways. I'm not the only lender that showcases this to my buyers. I know there's other lenders out there that do this as well. And so, if the right agent buyer see this, they will come to the property, even if they don't know if they love the house from the listing pictures, explicitly because of the finances. It's one of the chief reasons people want to buy new construction. It's not always because there's 20 outlets in a bedroom, right? It's not always because the kitchen has some facade that, they don't think they can build in a resale home. A lot of times it's because the finances make sense, right? And for a lot of homeowners, that's a lot of what drives their budget and what drives what they purchase, right? So let's give them the same opportunities, with resale, and let's give your sellers the ability to move a property quicker. And the quicker they move, guys, the less carrying costs. If anyone here sold a property, you can sympathize with the stress of the seller, right? They've got mortgage payments, and if they've already moved, they've got a rent that's double payments. It's like a whole thing. the longer the property sits, the more they're going to call you, the more they're going to stress. So, going into your listing appointments, it's not a bad strategy if you know the house is probably going to sit a little bit to plant the seed up front on credits. And maybe before it's even asked in negotiations, maybe just going ahead and discussing it. I know some of you may be a little concerned that, well, if we're already giving cards away on day one, they could just ask for more. And it's true. They can, but remember, it's a negotiation. Always just say no. You can say in good faith, we've already provided these credits. We feel that the value of this home is where it's supposed to be. You all are experts in this. This is what you guys do. So you've got that. But just know that it doesn't necessarily give away your hands. It just makes your listing more attractive. So, as I said, my biggest thing is take the credit over the tax cut. I say this to any and all buyers, and I want you guys to hear it because if you guys have objections from buyers or questions, that aren't going to make it back my way as a lender or whoever they're pre-approved with, you've got a little bit of knowledge, right? So if there's any takeaway that I've got to give to you guys today, it's that credits are more impactful than a price reduction, and that works both ways for buyers and for sellers. Basic math here. You win the listing with a good presentation, you close it fast, you get a good referral from that listing or from that seller, and they're going to tell their friends, family, hey, the market was slow, but they closed my home in 3 months, 2 months, 1 month, whatever, raving fan. And you get another referral out of that. And for you buyers agents, there's nothing more impactful than getting a buyer into a home with less money than they planned for. They will be so over the moon. They will buy the couch that they wanted that they said they weren't going to buy because they didn't have the funds for it after the closing costs that we had quoted them up front. They're going to, tell their friends, tell their coworkers. Everyone's going to be a raving fan if you can get them credits. You can get them in for less in the door. 10 times over, the best reviews I ever get are the ones where clients get in cheaper, less than they expected. And I would think nothing more for you guys on the real estate front. So if you ever have clients that have any needs to run these types of numbers, scenarios, you're doing listings like VJ, mentioned, you want to figure out how to write it up. If you're doing temporary buy downs, want to make sure that the calculations are correct. I'm here. I am not a legalese, professional, so I'm not going to be able to give you the exact brokerage approved verbiage, but I can at least help you, steer you in the right direction with that information. So I know I kind of threw a lot. This topic can be a little bit confusing. It can also be very rudimentary depending on how much time you've been in this business, but I want to open the floor to any and all of you to any questions that you may have. There's got to be some question out there.
With the buy down, because I've noticed that a lot lately with a couple of listings, some people doing a 2-1 and a 3-2-1 buy down.
Yeah.
That will particularly be best for people that know they're not going to stay there. Well, for example, 5 years per se, and the permanent buy down will be lifers, people that don't intend on selling their home moving forward. And I like the strategy that you do have with the price cut because, I have someone that I want this, and they was talking about the price cuts thing, and I appreciate that you broke down the seller's concessions thing because now I could talk to them about it and possibly within another week or two have them call you for the
Yeah.
numbers to be able to help market their home a little better, with the competitiveness and a zip code that their home is in, because it's a lot of new construction, and the new construction is taken over with the buy downs and the incentives and stuff. So, like the pre-existing homes, it's kind of hard, for them to get the attention of the buyers because everybody's so interested, in the sparkly new construction incentives that they're giving out. So this is
Yeah.
a way. Thank you. I greatly appreciate it.
For sure. And on the temporary buy down, it doesn't have to be that you're in the home for a short term. It just, a lot of people benefit more if they're in the loan for not
Right.
a significant period of time, not necessarily the home. So that's the only, correction I'll make. Everything else is perfect. But I think when you're doing listings, mentioning the total lump sum of the credits, but also mentioning what can be done with the credits and the remarks is helpful because not every buyer's agent has been in the business for 10 years, 2 years, 1 year even, right? And you don't know what you don't know. So you could have a buyer's agent that's, fresh out of real estate school, has a really good client that really is meeting people want to buy, but they don't know what you can do with the credits. They just see that it's there. So if you remark, buy downs, 2-1, 3-1 buy downs, how much it could potentially save on the monthly payment, as an example in the remarks, that can help some of the newer agents in terms of making sure their clients
Mental
ask.
health coverage through media literacy lens, starting with problematic headlines that blame the victim. Many of you send
Sandra,
this
I'm
to
gonna
me
try to
because it
unmute
is a
you.
glaring example of how news organizations often denigrate the dead.
All right, sorry about that. It took me forever.
And this is perfect because I have a buyer client contract right now, and I gotta show them some homes Thursday, and it's some that's under their, I'll say, pre-approval, and I know the difference could be used to buy down their rate as well.
Yeah.
So that's great. This is great. Great information. I greatly appreciate it.
For sure, and this I don't do as often, but it is something I discuss with clients. We've all had buyers that go under contract. Let's just say the price is 400. Appraiser says it's 425, and I'm like, well, this is interesting because now we can have a conversation. Like, hey, do you want to renegotiate your price to be more? And the client's like, why? I'm like, well, your seller agreed that this is what they want to net. But you have some options and some tools that we can throw into the mix now that we have a good appraisal, that we can get you some more out. So, it's not just for the listings, it's not just for when you're negotiating, it can be after the fact too as a little surprise. But yeah, and going back to the new construction, again, the new construction, they advertise these buy downs super heavy to get the foot traffic in the door. But, what's the main thing that the new construction properties don't have? It's not about how nice it is. It's what's the main negative with new construction?
History? They don't have history comps?
It's not about the comps. It's location. Most new construction is far out into the suburbs or even past the suburbs because that's the only place where there's land. Now, not every I'm speaking a lot to Charlotte here, but not everyone is in Charlotte, so some of the cities are different. But a lot of times, what you get with a challenge of new construction is they need a lot of space. So they may be in a less quote unquote desirable. I don't want to say that it's not going to be a nice area after time, but it may not be there yet. So a lot of it is fresh starts, and it's going to take 5 to 10 years before the area is going to see the full weight of all the construction and the value of that. So if we can help, clients get those same deals, but in areas that they really wanted to live, but they didn't think they could financially do, that's a win. And again, that helps convert more buyers that are prospective into buyers that are closed.
And you're talking about the temporary buy down?
All of them. It's not just about the monthly payment. Sometimes it's about the cash to close. Again, new construction's like, hey, we'll cover $10,000, $15,000 of your closing costs. Client may be like, well, that I can do. I can't do 10,000 more. I won't be able to buy furniture. Won't be able to afford the move.
Yeah.
By negotiating this stuff, and taking advantage of this. I actually kind of like markets like this. This is my 11th year in the business, and I think that from a buyer's perspective, these are the better markets. It's just not every buyer sees the value. Some of the buyers, they get hung up on the rate. They get hung up on what their dad or sister or cousin got in 2021, on their purchase or refinance, and they get kind of stuck. But, these markets provide opportunities for those that are willing to look, and that could be extreme savings on getting into the home. So if you budgeted for 30,000, but you get in for 20, that's an amazing deal that you're not going to get in a better rate market, because the better rate market, these houses are going to be flying off the shelf, just like we've seen before. So there's a lot of opportunity right there. And, these types of strategies are good at getting clients that are on the fence to jump over.
Because it varies on what works best.
Perfect. Well, exactly. And everyone's goals and objectives are different. That's why I do the intro call. I always make that part of my pitch to clients is like, I want to get to know you first. It's like a date, I'm not asking for you to make a commitment on the first, conversation. I want to know what, your background is, what your goals are so that when we get to our second date, which is after I've done an application and worked up a strategy, I have matched you with what I think is perfect. And talking about these things up front, can kind of plant the seed of this is on the table potentially. And I always talk to you guys. If you guys send me a client, I always tell you guys, when I'm going through the pre-approval process, what their goals, objectives are, and we can kind of figure out how to meet those with seeing what's out there on market. And listen, I know not every property is going to get credits. It is what it is. Some of our clients they want the beautiful property on the beautiful corner lot, and they're going to have a lot of competition. That's not going to get credits. It's probably going to go over asking. But for clients that are not looking at those, these strategies are very well, possible for them, and a benefit to everyone. So, well, listen, it's 12:43. Unless anyone else has any pressing questions, I want to turn the time back over to you guys. I appreciate all of you jumping on. This recording will be posted on the Facebook for anyone that wants to go back and rewatch it. I don't know if you guys have my phone number, but I'm gonna go ahead and put in my link tree. So if anyone has any clients that have any questions, or you simply just want to elaborate more and have more answers to your questions, this link will take you to my link tree. It's got my phone number, email, application link, past videos, etc. So feel free to check it out. But as always, I appreciate you guys, and I hope you all have a great rest of your week.
You too. Thanks again.
Thanks, Ian.
Of course. Yeah. Bye, y'all.
Bye.
Thank you.